All right, you're welcome. So this is how the indicator works. So I took a buy position, and why did I take the buy? On 1 minute, you can see that the market gave the signal for a buy currently now, and the trend on 1 minute is still uptrend. So I took the buy. So my stop loss will be here below where the signal is from was formed. Will be my stop loss region, and my take profit will be up. Now, if I'm taking trade accordance to the trend, I will expect it to go well. Now, in the case of this one, I'll be targeting $10 or around that range, around $10 range. That will be my target. And the reason is simple. I'm actually using 1 minute. That $10 range is actually the upper part of the indicator that actually satisfies that the market, if it reached there, then the market has reached a fair point. So now, if you actually somebody who actually have big capital like $200, $500, $1,000, it will give you more peace, more rest if you actually trade on higher time frame, like 5 minutes, like 15 minutes, like 30 minutes, or 1 hour. Just make sure you wait for the trend. Trade only when the market are aligned with the trend. We're going to watch this trade and see what the outcome is. We're going to actually check what has happened in the past. And people have been asking me a question over and over again that does the stuff actually repaint? The truth is that it does not repaint. If it does repaint, this indicator, this signal of buy here would have been removed. This signal of sell here would have been removed. That's what repainting will mean, because you can see that immediately give this sell, the market went up. Now you want to ask me that will it not now fail if I actually take trade? Now, if you take trade according to the trend, it will not fail if you actually wait for the market to touch the lower level and you take trade according to the trend, it will not fail. But this is it. We are human beings. We can become impatient. We can become restless. And we make mistake intentionally or unintentionally, but we are the one that makes the mistake. We can actually try and shift the blame and say, maybe this is not just working. So you have to calm yourself. That the indicator is very effective does not mean you will necessarily profit from it. The only way you profit from it is that you follow the simple rules of engagement. So no matter who you are, if you don't follow the rule of engagement, you will still lose money. You can see now the market is buying. I am not selling when the market sold here. I did not sell. Come and check the history. I did not sell. I only bought. Now, why don't I sell? When I saw the market give me a signal for a sell, go up, buy, go up, buy. You see now. So I did not sell. I only bought. And you can see market is already at the region of our take profit. It has actually touched the high to which the signal formed from. I can actually start, exiting my trade now and wait for the next opportunity. It's just as simple as that. The market went all the way up to touch this level. Then you close your trade or you actually wait for the market to touch the upper level. Now, the concept is that we don't actually also say you will win all your trade. I need to say this over and again. The reason why I suggested that people should actually have at least $50 or more in their account is that peradventure maybe you make a mistake, maybe the market pull back. For instance, now you can see that this trade has entered plus 10. Now it's back at around 32 now. Now this trade can go back into positive, into the plus 10. Can first of all go all the way to negative, and can even go all the way down to this level to start the journey all over again. It's possible. This is forex market. Now that is why, in case you are cutting losses, you actually make sure you know how you actually do it. So if you're actually having a small account, like I said, it will be ideal that you go to higher time frame and you trade from higher time frame. And if you don't have a higher account, if you have a lower account, it will also be ideal that you set a realistic target. For instance, a $50 account holder should not actually wait till the market deliver exactly all what the market could deliver. For instance, we still expect this market to go all the way up to, this thing is covering it. Let me just shift it. We still expecting the market to actually go all the way up to around 17 178, let's say 30, 35. That's where we see expecting the market to get to. Do you understand? 178, 35. That's where we see expecting the market to go to. And that would be $15 to $20, depending on how much you will enter. You can see I enter here at 78, 16. Now, but if I actually have a small account and I've seen $10 and I did not get out of the trade, and the trade go all the way back into break even or possibly into negative, it doesn't make any sense. And if I'm not careful, that can actually be the rundown of my account at the beginning, at the very start of the whole thing, because that will also be, reoccurring in your mind next time when the trade is going up in your direction. That even the moment you see $1, $2, you said you are satisfied and you want to continue holding the position again. Okay. Now see the market dropping, just like I said, tendency for the market to drop, and it is dropping. But let's see if the market reach our targets. Let's see. And let's quickly also look at what has happened before. See, when the trend was a sell on 1 minute, wow, This is where the market has been dropping from. I need you to actually pay attention. This is where market was going up from sell. From this candle, let's just look at 1 minute candlestick. So let's stick to our 1 minute. Now look at it. The market started a sell trend. In this case, you don't know the trend is about to start. You will only focus on your buy. Now the market gave opportunity for a buy here. Does the market buy? Of course. But the moment the market bought, now this is where people make mistake. You don't pay attention to what is already happening. The market forming a pattern. Do you remember concept of change of character and break of structure? You know that break of structure is what will continue to happen when market is going your direction. But change of character will happen when market is having a shift in perception. Now, a shift in perception has happened here because the market is supposed not to form a low that is higher than that is lower than this particular low. But we already have it, a low lower. Now, in this case, if you understand the concept of change of character very well, you know that now the market has tendency to start buying and not necessarily sell again. Though at that moment of the first pullback, you know that the market is still expected to go back to that area. It is a normal thing. Market is still expected to go to the high. If the market will buy, it will break it upward. If the market will sell, the market will actually not break it above. It's just a simple concept. If you understand change of character and break of structure. Now that's exactly what happened here. There is already market giving a shift in perception. And as you have a shift in perception, the moment has come that you will look at it, then you see that the market did not go above this region. Now, in the concept of change of character, you know that this is a possibility for you back, but you will expect the market to go up very well, then pull back, then you continue buying. But in this case, did you see the market failed to actually break it up, giving you a possibility, a new shift in mindset now that you should look for a sell. Now, are we going to sell here? Of course, you will know that you are taking a little bit risk trade, but the risk is still low. So what did you do? You take a sell here and you see the market sell off. Now, another sell. We are no longer looking at buy again. The market was buy before, but now our perception has shifted. The market is now looking, we are now looking for a sell. Now you see all the sell, all the sell, all the sell. Again, a shift in perception happened at this point. Now the market show you that the trend you want to change to become a buy trend. Because why? We have explained it. The new, because this is the high, lower high. This lower high is supposed to be higher than the new one. This one become equal with it, giving you another shift, a possibility for the market to start actually buy. But in this case, what did we notice? The market did not break it above. Even though it gets equal, but it does not break it above. Still giving us the right to continue our sell. Then if you have sold here, you make money. You will not be buying. You sell, then the market continue again all the way down, give you a retracement opportunity to actually do, and you see the market actually sold again. Then a shift in perception again for a buy actually happened, and which we now have here. Market went up, will not break this lower the way the market is supposed to do. Supposed to break this lower and it did not break it. Then what did you notice? The market started going all the way up, which is now the opportunity for buy. You see the signal that give you here when the market does not break, then you enter for a buy. Then you have your right all the way up. Are we going to be selling again? Of course, no. We'll still be looking at only buy, just like I look for a buy right now with the signal that form at this point, and you see the market going up. Now you see over and over, you see the market returning back to plus 10, and just like I said, you close your trade because the market is almost touching the high at this point, and you're supposed to actually have gotten out of your trade already and wait for another opportunity to actually fall. Just like that, you continue taking your trade over and over and over again. And with this concept, you can make as much as anything in the market. If you wait, even if you are trading with 1 minute, if you wait for that, just make sure you follow trend, even on 1 minute. If you do to 5 minutes, wait for trend. If you do for 15 minutes, wait for trend. If you do for 30 minutes, wait for trend. If you have a $50 account, stick to 1 minute. Target $10 per trade when you see set up in your direction. If you're actually having bigger accounts like $1,000, stick to 15-30 minutes. When you wait for good setup, when you take one trade, leave it and target. If you have $1,000, target around $200. You market will hit it. What did I mean by market will hit it? Let's go like this and let's show it. So what did you see now? In this case, on 1 hour, let me push it back. On 1 hour, what did you notice? The market's giving you opportunity. Now you see this way market consolidates on 1 hour, right? So this is not where we are looking at the trend from. This is where we'll be looking at the trend from, right? This is sell. Market has been dropping. Market has been dropping. Now, okay, this is making sense. You see the market went up for a buy, and it is a sell trend, giving opportunity for a drop. When you actually see the market giving opportunity for buy, you see this one. This is what I mean. Look at the market coming all the way down. Just the concept of change of character. You see the market went all the way up. Then the moment you see the market go all the way up here, you are not taking these sales. They are not good sales. You can see they are happening in between. They are also actually happening at the wrong point. Even though the market itself, you'll be selling when the market touch the upper band of this indicator. But in this case, it is in between. You don't sell. So in this case, we at this point, will we sell? Of course, because the trend is still sell, not buy. Until the market consolidates back and will not go below this level, then we know that we are now ready for buy because this is now curved upward. Then you focus only on buy, no sell again. Then you say buy. Now let's look at the profit for somebody who took this buy. let's say the signal form after this candle. So in this point, you took the trade from 85 to 87. That is over 200. But let's call it $200 on 5 minutes, on 1 hour rather. That's what do you call it now? $200 giving you straight up. You wait for another setup. You see the market went up, which is what makes you happy. You're actually holding your trade, which personally I would have exited the trade because it had touched the upper level. Then the market went all the way down to touch the lower level. I'll buy again because I will be looking for a buy opportunity alone and not sell. Then it went all the way up. The market, went up. I will not be selling. I'll wait for opportunity for buy. Market come back again. At this point, what did you notice? The trend is shifting. There is already shifting perception of the market because the market is making advance all the way down to the low that we have before. So, but if we buy, are we making money? Of course, even though the market consolidated, went up, pulled back a little bit, then went all the way up again for you in profit. And that's why I said if you have a higher account, because all this market push back from your entry level, if you have been holding for a long period, does not actually equate to $100. And if you add more position at this level, you make more money. So what did you see? The market continued that cycle until the trend changed. Now you see this coming down, a sell trend. So what are we focusing on? Sell and not buy. Does the market sell? Of course. Another sell, another sell, another sell, another sell, another sell, another sell. The market is already coughing also for a buy now. What are we waiting for? For the market to touch this level, then we buy all the way up. Then it will now become another buy, another buy, another buy. Then you get cost you $50 and you can actually use it at any time. So if you have interest, just message me on Telegram or WhatsApp and get yours. Peace out.